Good afternoon, and welcome back to another Mortgage Financing and Homebuyer Ready. I'm Barbara Grant Proctor with Cardinal Financial, and to my left I have,
I'm Jackie Abrams with Sampson Properties.
and we are so happy to be back with you. We have another exciting show for you today. Last week, if you were able to be with us the last 2 weeks, we talk about a seller's market
And a
versus a
buyer's
buyer's
market.
market. And believe it or not, things are starting to even change a little bit. So we got to do another show on what's going on, right, Jackie?
We do.
So,
We
but
do.
today we're going to continue our series with insurance. So if you go back a couple more episodes, you'll see that we've been doing different kinds of insurance. But today we have someone here with us that Jackie and I just love, and we use a lot of the times for our homeowners. And this is going to talk about homeowners insurance. And there's some things that you really want to pay attention to. So please stay tuned and come back, and we will see you shortly. Thank you for coming back and joining us with Mortgage Financing and Home Buyer Ready. Let me do a little, what do you call it? Like, they call it like housekeeping.
Yes,
Housekeeping. I didn't do that
housekeeping.
when we
That's
did our
okay.
intro, Jackie.
That's okay.
So I'm gonna do a little housekeeping. So if you would like to be part of our studio audience, please, you can email Jackie and I at homebuyingaudience@gmail.com. And if you have any questions about any of our shows, about mortgages, about real estate, even if we haven't done a show yet, you have a suggestion for a show, right, Jackie?
Excellent idea,
You can,
Barbara.
Yes, you can email us at homebuying
Questions.
at gmail.com. Get that? Home buying audience if you want to participate in home buying questions at gmail.com. So I'm going to pass this off to Jackie because we want to get into, because I know we have a lot to talk about today, and we want to make sure that we get this information out to you because that's what we do. Right?
That's right.
That's
Hello.
what we do.
That's what we do. So today, as Barbara has said, we have a special guest today. This is Miss Terry Milliker. And Terry Milliker is an insurance manager with Long and Foster Insurance. And I'd like to just say, welcome, Terry. Welcome to our show.
Thank you for
Welcome,
having me.
Terry.
Yes. And so Terry, I don't know, remember if you remember how we met or how I was introduced to you. Terry worked with another Long and Foster agent. I don't know how long they worked together, but he and I did a transaction together. And the buyer, I was working with the buyer. He was the seller's listing agent. And my buyer needed flood insurance. And I said, oh my gosh, flood insurance? What do I do? And he goes, oh, I have somebody for you. This is who I work with. And since that time, Terry was so incredibly impressive with all of her knowledge. And each time I talk to her, to tell you the truth, that has really been many years ago now, I have learned something from her. I believe that was even before, it was definitely before Barbara and I started working
Yes,
together.
yes.
It was. So it's definitely before
Because you introduced Terry to
2014.
me.
Yeah, definitely before 2014.
I think it's been about 5 years.
Yeah, it's been a while.
That's about right, perhaps. But anyway, she is here today to give you what she calls Home Insurance 101. Lots of information. So we're going to let Terry get started with sharing that information.
Awesome. Thank you guys so much for having me. It's a pleasure to be here. But I'm going to get right into it. First of all, we're going to talk about what is homeowners insurance. Homeowners insurance is a form of property insurance that covers losses and damages of an individual's home and assets of the home. Homeowners insurance also provides liability coverage against accidents in the home or on the property.
Okay.
And just so, because we like to keep everything, I'm going to tell you, real low key here, and we want to
Right.
make sure everybody understands. So when you're talking about liability insurance, just like car insurance, right? If something happens,
Exactly. So, long story short, homeowners insurance is going to cover your dwelling,
Yes.
your whole home. It's going to cover personal property. It's going to cover your liability. I'll give you a good for instance. Liability insurance is if you are having a party, a get together, and someone sues you because they tripped over your rug, your great rug,
Oh, my
and falls. Then obviously they say, oh, well, I'm going to turn around and sue them because I didn't work for a week. You have your liability limits. Liability limits can range anywhere from 100,000 to a million. If you need more than that, we have umbrella insurance for liability as well, so that will cover that also. So that's pretty much the main coverage as far as what a whole as homeowners insurance is. But we're going to break it down a little bit further.
Oh, wonderful.
So we're going to go over your coverages. Your dwelling coverage A, okay? Dwelling coverage A is the home and the structure that's attached to it. That's based on a replacement cost estimate of the dwelling. We'll talk a little bit more about
was just
reconstruction
about to
costs
yeah.
in just a little bit.
Absolutely.
But I'm going to go over the main coverages, and then I'll give you examples of things as well.
Okay.
Okay? So your dwelling coverage A is your home itself as a whole and how much it's going to cost to replace that home if there was a total loss. Your dwelling coverage B. B is including swimming pools, gazebos, anything that's not attached to your home.
Oh, okay.
That's going to be your dwelling. That's going to be your coverage B, which is your other structures, is what they call it. Okay. Then we're going to go into your coverage C, personal property. Personal property is huge. Personal property, I'm not going to go into an actual detail as far as a definition, but I'm going to give you my definition. Okay.
Okay.
My definition of personal property is if you take your home and you flip it upside down, everything that falls out of it is your personal property.
Okay.
All the way down
that.
to your toothbrush.
I like
It's
that.
the best way. It is. It's the best way to describe personal property, and
Yes.
everyone understands it.
Right.
Okay.
Absolutely.
So that's going to be your coverage C. All right. Your coverage D is what's loss of use. Loss of use is something that I'll give you an example on this as well. If you have a water pipe that burst in your home and you need living expenses to live outside of the home until the property is livable again, the loss of use is going to cover those items. So it's going to cover your hotel stay and things like that
Wow.
until you're able to be back in the home and everything is livable again.
Okay. Wow.
All right. Coverage E.
Oh, there's more?
Oh.
A, B, C?
There's a lot.
Look, you're already
Look.
teaching me A, B,
Look,
C, D, word
yes,
E now.
absolutely. E, yes, is your personal liability. Personal liability, as we explained before, is if someone was to sue you, you have that liability limit up to whatever that carrier coverage. Now, don't get me wrong, different carriers have different liability limits as
Okay.
a max. That's when you need to add in an umbrella policy if need be.
Got you.
But 9 out of 10 times, they at least go to 500,000. Sometimes most of them go to $1 million for liability. Okay. Then we have coverage F, which is medical expenses. Medical expenses, they max out at 5,000 of coverage, but that's if that person fell on that rug and tripped. They'll cover you for your actual medical expenses for that sprained ankle up to $5,000.
Okay.
Then if they sue you, then you have your liability to back you up. Okay.
Oh, okay.
All right. So that is pretty much all of the coverages. Do you guys have any questions about those at all?
Yeah. I mean, that's a lot. One that stuck out for me, which I wanted to ask the question on, I think it was C. What was C again?
Your personal property.
No, what's a C? Was it D?
So A is your dwelling. B is your other structures. C is your personal property. D is your loss of use.
Loss of use.
Okay.
That's the one I want to talk about for a minute. And only because experience with loss of use. Is that an automatic in your policy, or is that something that you suggest to people? Because I've known someone who had a flood, loss of use, but the insurance company came back and said they wouldn't pay for their hotel stay. Is that possible? Is that something that you have to buy into, or is that like automatic, like with you? Like automatic.
automatic.
You need to get it.
No, you're supposed to get that.
Well, I
Everyone
don't.
is
Everyone,
I
it
don't know
is
what
built in.
happened,
That
but
is
they
not.
could
So when
not-
you add things on, they're called endorsements.
Okay.
So when you
Okay.
add an endorsement, like water sump pump overflow coverage, the service line coverages, there are a lot of coverages that you can add on that are not built in. What I've just given you, that information,
everything built
is
in.
what is built
Okay,
into every homeowner's
okay.
That
insurance
is
policy.
so good to know. That is good to know.
Absolutely.
Do you think it had anything to do with it being a flood? Because she used the word flood. Would that
Right.
have put it in a
So
different
if it
category?
was flood is a very different whole entity, which
That's a
we will
flood
talk about
insurance.
later.
Right.
Right, which we will go over a little bit later. But flood insurance does not cover all of the options that
Okay.
a homeowner's policy will cover.
Okay.
But my question is, if the incident was related to a flood,
Then it would
they
fall
not
under-
have been able to get the loss of use assistance to stay in a hotel?
Correct, because it would fall
It would
under
fall
the
under
flood
the flood.
policy. It wouldn't fall under the homeowner's policy if it's an actual flood claim.
Okay.
Water damage versus flood is very different.
Very
things.
different. Okay.
Gotcha,
Okay.
gotcha.
Wow.
Okay.
That's interesting.
Learning, Terry.
Look, we're learning, right?
Right, that's right.
We just say, Terry, we need the policy and we need it to match the mortgage. So-
Right. That's all that
Actually, she
matters.
teaches me something every time I talk to her.
Is that a
about it.
fact?
I
Well,
talk to her a lot, so
Okay.
yeah.
Learning
so,
today.
Yeah.
So we're going to move on to reconstruction costs. That dwelling coverage A, that huge dwelling coverage A is a big deal. And a lot of insurance carriers will just say, "Hey, what are you paying for your mortgage? What are you paying for your loan?" That's really not the proper way. If you're a good insurance agent, you're gonna do a reconstruction cost estimator. Is what you're gonna do. A reconstruction cost estimator is when you put all the details. I gather everything up from your clients, going from the floor to the types of roofs to whether it's custom, semi-custom cabinets in the kitchen, to the bathrooms, the tubs, everything is a reconstruction cost. I put all of those details into the actual reconstruction cost estimator, and it tells me how much your home is going to be and the cost to rebuild your home.
Wow.
And let's be real, right now inflation is so bad. Everyone's insurance companies and all their policies have gone up.
Okay.
So the reconstruction cost is very important to make sure that that is on point. Okay.
So
Do you
if someone just kind of downplays it, what would be the hazard in doing that? What would be the negative thing if they just say they don't do what you do with that full looking through everything, trying to figure out the actual reconstruction cost versus how much did you pay for your home? I mean, something.
So usually when people say, how much did you pay for your home? 9 out of 10 times it's going to be more coverage than really what you need.
Oh, I
Because
see.
let's be real.
Right.
In DC, in certain areas, you're going to be paying a lot more for the loan than you are going to be paying for the home itself. So the reconstruction cost would affect that.
Gotcha.
You could either be under or over insured. So the best thing to do is just make sure the reconstruction cost is complete.
Okay. Give the real data, and then whatever you come back with really reflects what the
Absolutely.
actual cost should be. Gotcha.
Absolutely.
Okay. Thank you, Terry.
And most times we want it to be a little bit more. Anyway, not overinflated, but just
We do put an endorsement on there as well.
endorsement,
The
that's-
endorsement
okay,
that we
that's
put
what-
on is called an extended dwelling coverage.
Okay.
Which is usually anywhere from 25 or 50%.
Right.
Which is your choice. That bumps it up. So if it's
Okay.
$100,000 and you do 50% extended dwelling, now you're having 150.
gotcha.
Because it's always
Okay.
going to be 50% of whatever the dwelling coverage A is. Your extended dwelling coverage is going to bump you up that 50%. That
Okay.
doesn't mean that when you place a claim, that doesn't mean that you're going to get 150.
That's right.
You know,
exactly.
that just means that you're guaranteed 100, and if you need 150 or 125, you have that backup.
Gotcha.
And I'm trying to really understand, because I know when we do mortgages, when I use you, Terry, it normally, when it goes into the underwriter, nothing comes back. But a lot of times when I
Amazing.
use the other companies, they come back and they go, it's not enough reconstruction cost, or it's not enough this in order for us to do the mortgage. So that's why I'm listening to you very intently on this, because I do notice that a lot of times other insurance carriers, if someone picks another insurance carrier, when it comes back, is always something extra that needs to be added. So
They
absolutely.
want that premium to be as low as they can get it because they want to win that deal.
Right.
And unfortunately, that's not how I roll.
Right.
I make sure that the client's taken care of. I don't worry about a premium.
Right.
If they're worrying about a premium, then unfortunately, it's probably going to come back to them later. And you want to make
When you least
sure,
expect it.
when you want to make sure that that's on point. Your
Yeah.
reconstruction cost is very important.
Okay. Thank you for that. Awesome.
So we're going to move on to underwriting. All right. Underwriting. So underwriting is huge. When you call in and you have a client that calls me, I'm going to ask them a series of questions. A couple of questions to give you an example is obviously location of the home. The credit score is not necessary, but they're going to pull what's called a claims report, which is a clue report. We're going to pull, that's the claims history. We're going to pull how old is your home? How close you are to a fire hydrant. You should be within 5 miles from a fire hydrant. Or
5 miles. That sounds.
I mean, fire hydrant, fire department.
Oh,
Look, there's my mistake.
okay.
5 miles from a fire station or 1,000 feet from a fire hydrant.
Okay, gotcha.
That's called a
Okay.
protection class. So
Right.
you need to be within that mileage and that distance from a fire hydrant and also to a fire department. We also need to know whether you have pets. Different types of pets. Some pets have a higher liability, and insurance carriers don't want those types of animals in your home because of liability claims.
What type of liability would a pet be?
Pit bulls.
Pit bulls.
Biting history.
Attack.
So they have, unfortunately, they get a bad rep. I have, like I have, my uncle has 2 pits and they're amazing. So
I
it
know
just,
some amazing ones also.
and it's
Just
just,
how
it's
they
sad.
train. It's how they
bad,
train.
yes.
It's sad,
Yeah.
but it's true. And insurance companies have that advantage where they can pick and choose who they want to insure, unfortunately. So they can discriminate against different types of animals, and pit bulls is one of them that they do discriminate against. Also types of roofs. Every roof is very different, and underwriting, they don't really like anything that is over the age of 20 years old. So if you have 20 years old roof or more, then they tend to not want to insure it.
Oh, wow.
So roofs is also big, and then occupancy. We want to know who's going to be in the home, and that will determine what type of home and what type of policy that you need.
Okay.
For instance, a dwell and fire policy. A dwell and fire policy is a DP policy, which is a investment property. So you would need an investment property. Then you have homeowners insurance. Homeowners insurance is what you would purchase if that's your primary residence. You also have a renter's policy. We offer renters insurance for a renter's policy. And then we have vacation homes.
Right.
We need to know if it's Airbnb and things like that.
Okay. Okay.
So the occupancy is huge.
So when you said the people in the home, if they're 2 people versus 7 people, would the rate be different because
If
you
it's
have more
children.
people in the home? Oh, okay.
Yes.
The age of the children too, does
So
it matter? Or
no, not
teenage?
necessarily the age. They just want to
still
know
children.
how many children are in
Under
the home.
18.
Under 18. Yeah.
Okay. Okay.
So that question is asked a lot as well. So there are certain carriers that, and Progressive is one of them, they will ask that specific question. How many children, any children under the age of 18 in the home? And then also too, if you have 16-year-olds and they're driving and you're doing a quote for an auto policy, they have to be listed on the policy. They don't have to be included. They might have a driver's license or a learner's permit, and they may not be on that policy. And then you can exclude or include them on your auto policy, but everyone in the home has to be listed. So if your sister is living with you, your sister has to be listed on the policy, but they can be excluded. So occupancy is huge.
Okay, wow.
Good information. Thank you so much.
You're welcome.
As of right now, I have no children under the age of, what was that age again?
18.
And it's being noted right now, right? We can go back and pull this, right? No, I'm joking.
I can't say that. I started over.
I'm sorry. Go ahead, Terry. This is good information. Good information.
Yeah, absolutely. So that's pretty much it as far as the underwriting goes. We can go into it in more detail in just a little bit. Other than that,
And how long does it normally, like when I send you over somebody, matter of fact, I got to send you somebody today. When I send you somebody over, normally how long does it take for underwriting to actually go through it and decide that, okay, this is what the policy is going to be and the time frame? I know you get back to me pretty quickly, so I'm assuming your underwriting is like 24 hours or something, or 48 hours?
I do my own
I
underwriting.
was about
No,
to.
you-
I was
you know-
just
you know
thinking
what,
that.
Jackie,
I was
see?
thinking that. I was thinking that. I'm like, does
You
she
see
have
how we just
time
pulled that out? 'Cause I'm like,
to
you get back
interject someone
pretty
else
quickly.
into the
No,
transaction?
I don't have
Yeah.
time. I don't
Terry,
have
you
time.
are just amazing.
I do it
wow,
all.
Just
Terry.
I do it
amazing.
all. From the time I get the client from you, I contact them immediately. I get the underwriting information. I have a little form that I go by, and it's amazing. I love it. I created everything. I go through all the underwriting questions, everything that I need from the client, and I tell the client because usually they want expectations.
Yes.
You know, so I give them that. I do my quotes all within 24 hours.
I was wondering because I said, yeah, I know, our underwriters can do 24 hours, but it's actual. But for you to do it yourself, that's
Wow.
awesome. No wonder we
Well,
get
it
it back
takes-
so quickly.
That
It takes
we get it
me
back.
it takes me 24 hours, not just for underwriting, but it takes me 24 hours to do the quotes because we quote through different carriers. So it's not I don't represent just one company.
That's
I represent
right.
27 companies.
So are you considered a broker? Like
I am a broker.
A broker.
Absolutely. So
And that's
having,
one of the things I'd like to interject here is that another reason why I really like working with Terry is because it's not just going to one agency. She, as she calls it, is able to shop through and find the best cost and the best policy for my clients. our
Yeah, with
clients.
different
So,
insurance
yes.
agencies. That's good. That is awesome. Yeah. Oh my goodness. So we just, like I said, we're just learning some new things here today, and I'm
Yes.
loving it, Terry. I mean, I've been working with you for over 3 years now. I just say, Terry, I need the policy. Terry, give me the policy. I don't worry about all the other stuff. I send it over to the underwriter.
right.
I'm done with the insurance. After Jackie has said we got a new client, but I come to Terry on my own now to Jackie.
Yeah, yeah. She just shared that with me. I did not
Oh.
know that. I did not know that.
My refinances, if I'm using another realtor, I know I go to Terry as well.
and don't forget, you just found out how many states that I
And how
actually
many?
represent.
I just found out how many states because I
That's
have a
right.
deal in Pennsylvania
That's
that I
right.
need Terry to do. So I'm excited about it because that other company that you named was crazy. But we're going to come right back. We're going to take a break, and we're going to be right back with Terry to talk more about HOI, homeowners insurance.
All
We'll
right
be right
now.
back.
It is key that you mind your mental health.
Hey guys, how's everyone doing this week? Hi.
Use the 5 keys to mental
Well, this week
movement.
has been a really monumental week for me. I realized that I was not being myself.
Reaching out.
Be positive attitude person self, like you guys know me to be. I was
Staying
listening to
upbeat.
teaching and get back to that happy, cheery self you guys of me.
This week's been kind of
Being
stressful
creative.
with all of the workload that we have on online learning. So I've been trying to use different platforms and different websites to help ease my mind and ease my stress.
And what about you, Margaret?
Well, you guys know me. I just love to work with others and serve them.
Serving others.
Realize that when I serve others, my mind is off of myself.
That's right. And don't forget, self-care is key.
Self-care.
All right. So see you guys next week.
Right.
Bye.
Your mind matters.
And we're back with mortgage financing and home buyer ready. And Jackie and we are sitting here. We're having a ball today.
Yes, we are.
Talking with our HOI, our homeowner insurance agent. I hope you're listening to the things that she's saying. Because a lot of times, like what I just said, I just ask for the policy. I just know she does a good job. And I know that my underwriters never send her stuff back. And so therefore I like to
And that's all the
recommend
proof you
her.
need. That's
I
the
like to
proof you
recommend
need.
her. I mean, the
That's
client
right.
could go with you, Terry, if they want to. And I always recommend it. And then we always, one thing I noticed, and I just want to say this real quick. One thing I noticed a lot, when Jackie and I do a transaction together, she automatically sends, okay, we have somebody you can, get insurance, but of course, by all means, go through your carrier, check, see if you get the better rate, et cetera, et cetera. But one thing that I love what Jackie does with Terry, was she makes the introduction to Terry, and she also tells them everything that is needed up front with Terry and have the discussion with them of what it is that you're looking for. So with your insurance carrier, we can't do that. It's usually on an automated line. I've seen people go on, an automated
That's
line
right.
and just
That's
put in some
right.
information,
That's right.
but you really don't know exactly what you're getting. And we're sitting here listening to some of the things in the homeowner's insurance. So let's continue on.
Terry mentioned earlier that you have some type of checklist that you use, and so I didn't get it from Terry. I'm a checklist person myself, and so when she told me
Here we go.
probably
Timeline.
after the first, or maybe after the first deal we did, maybe into the second deal we did together, she was asking me the same things, and I'm like saying to myself, okay, I might as well put this because I don't remember all that stuff. So
You have
let
a
me
nice
just-
template.
Let me just put it on a template,
does.
and so that way I can get all of the information from the client.
And it's part of Jackie's timeline.
It is.
You know how we always talk about Jackie's timeline? Yes, it's part of Jackie's timeline.
when the clients want to pay attention to the timeline and go by the timeline.
That's a running
And we
joke we
tweak
have
it,
here.
and we tweak it too.
Oh, you
so
tweak? Okay.
yeah, we
That's
tweak
awesome.
it.
That's
so
awesome.
as I ask her for additional information, she says, "Oh man, I got to update this. Let me update this real
And
quick."
that's another thing. Yeah, that's another, and that works well. You know, when you have a
does.
relationship,
That's right.
that you can work with that person and talk through things. You know, things
Speak
that
of
we do.
relationship, when
Yeah.
people are also on vacation. And you have a relationship, and you,
get-
ask for a policy or a quote
Text
to
them,
be able
call
to be
them.
produced. I'm just going to say it out here, Terry. I hope it's okay. Terry's the person, when she has been working with certain real estate agents, she will make sure that policy gets done. I think other insurance agents, if they're working with someone in their office, they may have to push
off.
them off to them. Is that kind of how it would go? if you weren't
Sometimes they do,
available?
yes. I am just a
With the word
Workaholic.
no,
I just
wouldn't
like to
call
do it on my
workaholic.
own.
Yeah.
I don't
you
like.
like for your things to be
I
efficient.
just want it to be done. I want it to be done right, and I want it to be taken care of when it needs to be taken care of. I was just on vacation, and Jackie called me, and I'm like, "It's going to take me an extra day, but I'm going to get this quote done. I'm going to send everything over to you by tomorrow," and I did.
Yes, you
and
did.
it was all taken care of, and we were good to go. And I don't mind answering emails. I am a very, very
you answer
responsive
my text
person.
messages too.
Text message, except for you don't answer mine. No, I'm just kidding.
She didn't mean that. But listen, I answer my text messages. I want everybody to know. I answer. It may not answer a phone call because I get so many, but I will come back to my text messages. But in that text messages, because we're here in the DMV area, DC, Maryland, and Virginia. Like I said, I was doing something in another state, and I didn't like the quote. So Terry, please tell everybody what states you actually do.
They've expanded. So I do now Pennsylvania, New Jersey, Virginia, DC, Delaware, and Maryland.
That's awesome.
Wow. Okay.
That's awesome.
That's great to
That's
know.
the northeast quarter.
They wanted to give me West Virginia, and I said, no, I'm not ready yet. I have enough states for now. So eventually we'll be doing West Virginia
Okay.
and then probably moving south.
Yeah.
We have expanded into the Carolinas and hopefully maybe even Florida.
That's
But we haven't gotten
awesome.
that far yet. So we're working on it.
All right.
I
If
hope
I ever
you
move
get
to Florida,
Florida.
that would be wonderful.
I would.
the
I might
condo-
move there.
yeah, I get a lot of Florida condos, so that would be awesome.
Insurance policies are insane
I
down
know,
there. My
'cause
mom
it's
lives
Florida.
down there,
Yeah,
so
yeah.
she totally understands it. But
The condo
yeah,
fees are
absolutely.
crazy. I mean, they're crazy here, but the condo fees are really in Florida. But that's where people go to retire, and they get condos, and that's where they go. So,
Hopefully they'll build the buildings right.
I didn't know all of that. I just originate the condos in Florida. I didn't hear nothing about buildings being built right. That was your homeowner's insurance. Don't scare my clients.
No, I'm not scaring your clients. Florida's an amazing place to
It
be.
is. It is.
I'm gonna be there. I'm gonna go there one day.
Absolutely.
Well, I'm gonna get into the updates for your major systems.
Okay.
Okay. First we're gonna talk about roofs. A little bit about the roofs. So asphalt composition shingles last anywhere from 15 to 20 years. Okay. So that's where we were talking about.
Now, if a home, if a builder says that it's a 25-year roof, is that what you're saying?
Now, it could be
'Cause some-
architectural.
yeah,
So if they say
architectural is
25 year,
25
it's
year.
usually asphalt comp. If they say, oh, it's a 35 year or 55 year roof,
Then
that's going to be the architectural
Yes,
shingles.
Okay.
The difference between architectural shingles versus the asphalt comp shingles, if you're looking at them, the architectural shingles look 3D. They come up a little bit, and they
right,
kind of like
right.
stagger.
That's right.
Whereas if you have your asphalt comp shingles, it looks more flat.
Flat. Mm-hmm.
So that's how you can really determine what type of roof that you have. So if you have an asphalt composition shingle, it's 15 to 20 year of a lifespan. If you have the architectural shingles, that can be anywhere from 24 to 30 years. Now I think they're making them 55 years.
Yes, I've heard.
So
because of the way they are. This
just
back
because
here.
of the different types of textures and things like that that they're making, the materials and stuff that they're making them out of. And now you can even get roofs that are wind resistant for if you're by the coast. So I live in Calvert County. In Calvert County, a lot of the stipulations to write through some of the carriers, they want you to have the windproof roofs. They want you to have certain types of shutters. They want you to have different types of boards where if a hurricane or tornado comes through. So you're going to see that a lot on the coast and on the waterways
What about
and things
metal
like that.
roofs? I've done a little bit of my own research on metal roofs. What about that?
Metal roofs, so slate lasts up to 50. Metal roofs, they really don't need to be replaced, just as needed
Okay.
basis. But there are some insurance carriers that really don't like metal roofs.
why is
So you
that?
just have to be careful because they can be damaged easily.
Oh, okay.
And they're very expensive.
Yes, they are
To
very
replace.
expensive. Yes, they
So
are.
some insurance carriers, when it comes to roofs, I like to stick to the architectural asphalt comp roofs.
Okay.
Slate roofs are really nice to have. They
Oh,
last
okay.
like 55, 60 years.
I don't know that I've seen this.
They have a lot of them in DC.
Oh, okay. Okay.
They're usually older homes.
Maybe
and they're-
Baltimore.
Baltimore
okay,
area.
Okay. Yeah.
And they're very, very expensive roofs. It's very thick, like glassy type textured shingle, but they're very, very durable. So the wear and tear on them is amazing. So if you can ever come across a slate roof, do it.
Okay.
Flat roofs, they're huge. There's a lot of companies out there that really don't like flat roofs because of the lifespan of them is anywhere from 10 to 15 years.
Okay.
So flat roofs, they're great. They can be made of rubber, the rolled rubber. You can be built up tar and gravel. It just depends. A lot of the condo buildings have those flat roofs. So that's pretty much the lifespan of the roofs. Do you guys have questions about roofs?
The only question I have about roofs is that if something happens to your roof when you go to do the cost replacement, if we wanted to upgrade our roof to one of those ones that you're saying 55 year, they're only going to give us a cost estimate to what we already have, and then we just add the difference with our contractor. Is that correct?
So when I do a replacement cost, it's going to be as is. So if you move in the home and you replace the roof, you're going to call me and tell me, hey, I just had the roof replaced because it's like a $300 discount by having a new roof.
Okay.
That's the first thing you're going to do. Discounts are huge. I just did it on mine. I just had my roof replaced and I went back into my carrier and I put the new roof.
I had my roof
And it-
replaced a couple years ago, so I should have went back to my carrier
You
and
should have
said,
went back to your carrier and told them you had a new roof put in, and they will be happy to change that year on there, and then you're going to see your premium go down.
okay.
Wow. All right, Barbara. Ching,
Yes.
ching,
New
ching,
roofs.
Save some money.
I saved $300.
Wow.
But I think
So-
I'm already with you. I think I already switched over to you because I look at it. I think, okay, we'll talk later. I think I did that a couple years ago. Okay.
Yeah.
I'm sorry. Go ahead.
It's okay. All right, we're going to go on to heating and AC. Okay. The average life expectancy of heating and air conditioning units are 15 to 20 years for your furnace, and the coverage extended, excluded uninsurable and underground fuel tanks. Some carriers don't. Sorry, I just added that in. Some carriers don't take the underground fuel tanks. So when it comes to the furnaces, if you have propane and it's underground, they will likely, you need to say if it's underground or not, because a lot of the tanks are above ground.
Right.
Now, if you have a tank that's in a basement, that's not considered underground.
Okay.
Okay.
That's good to know.
That's going to be in a basement, and it's still going to be above ground because you can get to it. An underground fuel tank is if they dig a hole and they put it in the ground. A lot of those tanks are starting to leak. So if the tanks leak, it can become a problem. So the insurance carriers would prefer you to not have an underground fuel tank. So it just it doesn't mean they can't be insured. It just means that it is limits me to what carriers will take it.
Okay. Okay.
Okay.
So how would you find that out, Terry? Because I'm not putting that on my information to you. Is that something you're asking?
That's something I ask the
buyer?
client.
Okay, the client.
And
once
I'll
they-
know because when I'm looking at the listing, because I don't just do what you send me, I also go to the listing.
Yes. Okay.
And when I go to the listing, I look at all the details on the listing, and if it says propane, I'm going to ask those questions. It's
Okay.
going to trigger me as an underwriting. I'm going to do that. I'm going to go in. I'm going to say, okay, where's the fuel tank? And sometimes if you're looking through the pictures, you'll see it in the
That's
basement.
right. Yes.
And if
that's
I
right.
see it on the basement or if I see it on the side of the house, I don't usually ask. Oil, same thing. Oil heat.
Oil, yes.
You know, you'll see the tank on the side of the house and things like that. Then I know, okay, it's oil heat. The tank is above ground. We're good. So those are things that I look for,
Okay.
just to look for.
So once the policy has been given, does anyone else ever go out to the home, or is that it? Is that how you are able to tell what's going on with the home through what I've given you, or other agents have given you, real estate agents, and then also what you see in the listing, or is there a visit to the home at any time?
There is a visit to the home.
Oh, okay.
Anywhere from 30 to 45 days after you go to closing.
Okay.
Not every carrier is going to call you. 9 out of 10
just gonna
times,
come.
they just show up. They do an outside inspection. You're going to see them walk around the home. They're going to take measurements to make sure my square footage, make sure the roof is a gable-shaped roof, make sure that there's no hazards. If you have trees hanging over your house, things like that, cracked, missing handrails, they're going to look for things like that. And then you're going to get a nasty gram from them saying, hey, I need XYZ fixed.
Okay.
Or the roof is more than 20 years old. You have to either have it repaired or replaced or certified. And then I have to ask you for documentation for things like that, and also to repairs. If you do repairs, I need pictures.
Okay.
I send everything in because I do all my servicing as well. So after I issue a policy, that client's mine. So
She does it all, folks.
She's a full-fledged insurance.
full service. That's
Yes.
So if you, anything that has to do with the policy itself, the client, I get that contact information, I contact the client, I do it, I issue the policy, I send the documents to the loan officers and agents and the client, and then after the fact, anything that has to do with changes, they call me, I do my changes, any communication between me and the insurance company, I communicate with the client and get it taken care of.
Okay. So you just said that they do I'm assuming an exterior perimeter type of inspection. Do they ever go inside the home also?
They will if it's a high valued home.
Okay.
High valued homes, they need to make sure that I accounted for every little piece of molding that
So
is
what
in
is
the
that,
home.
over 300, 400, 500? What's that?
Typically it's anywhere above 750.
Oh, 750. Okay.
Oh, really high value. Okay.
Yeah, high value.
Not in my neck of the woods, but yes.
Right.
Right, Terry.
There are some.
Gotcha. Okay.
Okay, awesome.
Yeah. So we're going to move on to plumbing. Plumbing, the average life expectancy is 20 to 50 years. They're going to ask you what kind of piping you have, whether it's copper, PVC, things like that. If
They're
you
going to
have,
ask us, the homeowner.
they're going to I have to ask the homeowner what type of plumbing that it is if it's a problem. Not usually with newer homes, we don't have to ask those
Because
questions.
you know it's PVC.
Right.
Yeah.
So even if it's copper, it's okay. You know, they just
it's
there
an
are
older
certain
home.
types of plumbing that they want to know if there's plumbing updates.
Right.
If there is, then they're going to ask for proof of it. So typically, I say no plumbing updates unless it really needs to be. Electrical life average life expectancy for circuit breakers is 30 to 40 years.
Okay.
Now, they do not like knob and tube wiring, aluminum wiring. There are certain electric panels that are less than 100 amps, and there are certain circuit breaker companies and brands that they don't allow.
I'm aware of that.
Okay.
Yes, I can't think of it right this minute, but there is
Yeah,
one that I'm
I
very
knew
aware
them
of.
before, but I don't know them right off the top of my head right now. So I'm gonna talk a little bit. That's pretty much it for the units. But I'm gonna talk to you guys a little bit about a clue report.
Okay.
Okay.
Clue report.
A clue report.
A clue report.
Clue report
Okay.
stands for Comprehensive Loss Underwriting Exchange, and what that is, it's like your report card for your house.
Ooh.
It's
As a teacher,
it's like
I
a
love report cards.
I do not like report cards. So it's equivalent to a credit report for your house, which it brings all your claims that happened at your residence
Right.
up to 5 years. So it's huge. If you're going to place a claim, make sure you're placing a claim and it's worth the money.
Place the claim.
Because
Absolutely.
it's going to be on your clue report. So if you were to shop carriers, that clue
They're gonna
report,
see
that lovely claim is going to follow you for 5 years.
Wow.
Absolutely.
Now, the cool thing about it with you, Jackie, is that if you're representing a buyer and your buyer purchases a home and I pull the clue report, if there is a claim on the house that you're purchasing, that claim gets excluded off of their clue report.
Oh,
Okay, good.
Because it doesn't have anything to do with your buyer.
new
It has
buyer.
to do with the seller. The seller then will transfer, and that claim will follow them on their clue report.
To the next home.
So as an insurance agent, we can exclude those claims, which is huge because you don't want that claim to follow you to your brand new home
That's right.
if it's not yours.
That's right. So you have
Now-
your own claims, and then you're saying that you could possibly have inherited someone else's claims, meaning double claim. So that's
Right.
wonderful that that's
So we exclude them.
That's
They're
great.
excluded.
That's great.
But if you have a renter's policy and your buyer is purchasing a home and they have a renter's policy and they put 2 claims in, it follows them.
Oh,
So then it also too makes their homeowner's insurance higher. Not to mention a lot of carriers won't accept anyone with more than 2 claims within the last 36 months. So when I tell you people, make sure you're looking at your claim, make sure you're getting your pricing before you place a claim because
Right.
it will follow you and it's huge.
So if they don't want to place a claim, what would they do? Would they just pay out of pocket?
Pay
out of pocket.
Okay, pay
The
out of
best way
pocket.
I like to tell my clients is if you have if you're thinking about placing a claim, first of all, find your deductible. How much are you paying for your deductible?
Absolutely.
If your deductible is $1,000 and you get estimates for $500, don't place a claim. Your insurance company's not paying anything. Now
anything
you got a
anyway.
0 paid out claim, and you paid $500. You were going to pay out $1,000 anyway.
Wow.
Yep. And it's
So
on your
make sure
report.
it's at least worth your while. I just did it. I placed a $27,000 claim
Right.
because I had my roof replaced.
Right.
But to me, that was worth it. I paid
Right.
$1,000. They paid $26.
Gotcha.
Wow.
That is worth it. If you have a claim,
Absolutely.
that is,
Absolutely.
for instance, if you have something for $3,000, I would consider paying it out of pocket if you're okay with doing that. If you're not, then, you know.
Okay. So
Wow.
question, a roof, and you were able to make a claim on your insurance, was that because there was some weather damage that caused it, or was your roof just at the maximum age and you could still?
It has to be weather related.
Oh, okay.
So I had that bad hailstorm. I
Yes.
purchased my home in 2020, and that winter we had that terrible storm. And then in March, I realized there was mold in my garage. So I was like, "Oh my gosh, my window's leaking." The window guy came out. It wasn't my window. He said, "You have a problem with your roof."
Wow.
So with that being said,
Hail can
then
do a
I'm
lot
like,
of
okay,
damage.
I have hail
Yes.
damage, and I already had an older roof to begin with. I knew it was older, but it
Was it
wasn't
close
quite
to the-
20 years. It was
okay.
18,
Okay,
but it was
okay.
close. So I put it through
Okay.
insurance, and they covered
Absolutely.
everything. I paid my $1,000. They were amazing. They came out. The adjuster came out, and they literally now they wire you your money. They don't even send you a check. They wire it to you. I was like, oh my God, this is amazing. I just had like all this money in my bank account. So it was great. It was a good experience.
Right.
But claims are huge for sure.
Yes.
But
Yeah,
yeah.
and that's good word for everybody to make sure that you know what it's going to cost for you to get it
Estimates
fixed.
are
That's right.
free.
If it's
Get them.
something
That's what I was just about to
small.
say.
Estimates
Should
are
someone
free.
call their agent? So should someone call you to say, this is what happened? Should I place a claim or not? Is it
Right.
okay to do that?
Right. So so absolutely. So make sure that you call your agent first if you don't think the claim is going to be too big. But we're going to take another commercial break, and then we're going to be back, and we're going to get some more good information. See you when we come back.
Badass us. Yeah, that's right. That's who we are. Badass us. What? Who are we? We are women. Beautiful, accomplished, and divine. That's right. Badass us. Yeah. Who are we? We are gentlemen. Our brothers, accomplished and determined. Yet, as society see us, we must still change the narrative. Yeah, that's right. Who are we? The black community. Remember us? We are accomplished. We are determined. We are divine. We are of greatness. That's right. The black community. Badass us. Who are we? That's right. Who am I? I am the person What about you?
And welcome back to Mortgage Financing and Homebuyer Ready. So we want to get some more good information because this information is really good. Jackie and I, well, I know I am. I'm learning some extra stuff. You know some stuff. I'm learning some extra stuff.
I'm learning also.
So what do we want to talk about now, ladies? What are we going to talk about now?
We're going to talk about water damage versus flood damage.
Yes.
This is a huge topic. I'm not going to get too into it.
Okay.
But I'm going to do the best that I can.
Okay.
To kind of move everybody through this. Water damage. I'm going to talk a little bit about water damage first, then we'll move into the flood. Okay. So water damage is, for instance, if your pipe burst in your wall and the water just spews out and your floor is destroyed. They always say, oh my God, my bathroom flooded. It's really not flood, it's water damage.
Gotcha.
But that's a term that everyone uses. So as soon as you call your company and you say, my bathroom flooded, they're going to say, well, do you have flood policy?
Okay, because you use
So
the
don't
word
use
flood.
the word flood,
Okay.
please. Don't use
Right.
the word flood. Just say, I have a lot of water damage. My floors are destroyed.
Right.
You know, it has gone up my wall. They're going to have to cut everything out. So the process with water damage, first of all, you're going to want to find where the water's coming from. Shut off your main valve. That's the first thing because that's going to stop further damage. And they're going to ask you these questions, but I'm telling you just to do it. Shut off the water main. Find out where it is. Call a plumber. Unfortunately, homeowners insurance doesn't cover the actual plumbing repairs.
Oh, okay.
But you have a warranty. If you have a warranty, that'll cover it.
Okay.
But a homeowner's insurance policy doesn't cover the actual repairs of the pipes.
Okay.
That's your responsibility.
know.
Okay.
So you might as well go out, pay what you got to pay. Then you're going to call a water remediation company. I use ServPro. They're huge. They're great.
Yes, they are.
So ServPro, they'll come out, they'll do the water restoration situation, get everything taken care of after the plumbing is fixed. Because
after the
obviously,
plumbing is
that's why you're
fixed,
calling your
okay.
plumber
Right,
first.
Gotcha,
You shut your water main, you find out where the water damage is coming from, you go up, you turn off the water main, you call your plumber, have the pipes fixed first.
But ServPro will come out and suck up the. Who does that? The plumber who sucks up the water? 'Cause I thought ServPro
But
came out.
ServPro is going to ask you that question. ServPro is going to say, well, do you have the plumbing fixed? Because they're not going to come out and suck up water if it's continuously having
Oh, I
that
see
problem.
what you're saying. Okay.
So just the rule of thumb, for instance, you're just going to cut the water main, call your plumber, have the plumber fix what they needs to be fixed. You're going to call ServPro in the meantime, get ServPro out there. Save all of your receipts.
Yes.
Because your receipts can be applied to your deductible. Because they're making that, because you get that coverage from your homeowner's policy with water damage.
That is good to know. Receipts
So
go towards
save your receipts.
deductible.
Save your receipts. You can tell them,
Wow.
hey, I have a $1,000 deductible. I just paid $500
Yes.
to ServPro. They're only going to take $500 from you at that point.
Okay.
Makes sense?
Oh, that's
Excellent. It
awesome.
does.
Yes. So save your receipts. Have
Okay.
ServPro come out, do the water remediation. But then after that's done, you still have warped floors, your baseboards, everything is still not working properly and it's not in the condition that it needs to be in. So that's when you're going to place your claim with your homeowner's insurance. You're going to have the adjuster come out. The adjuster is going to come out and look at the damage. Then they're going to decide how much money they're going to give you for the water damage. So that's what water damage is. Okay. If you have flood damage.
Oh, I'm sorry. I have a question for you.
Yes.
So you just said something about baseboards or if your flooring is damaged due to the water. Is that something that's covered
Yes.
in the okay. Okay. So you just okay, I got you. All right.
Then for a claims purpose, it would come through as water damage.
Oh, okay.
It's not going to come through as hail or wind. So the difference between that claim versus another claim that has to do with hail and roof, one's going to be a catastrophic loss.
Okay.
One is going to not be.
Okay.
So
Gotcha.
unfortunately, with the water damage, even though it's not your fault, it has a higher hit than it would be if it was Mother Nature related. So the claims come through. It's kind of like a driver's license where you have points on your driver's license. If you
Yes.
go this many miles an hour versus
Yes.
reckless driving, you're going to get 2 points versus 6. It's
Wow.
kind of the same thing with the clue report. You're going to get a couple of points, but you're not going to get as many if it was a catastrophic loss.
Okay.
Okay, so all of homeowners insurance policies is going to cover water damage, hail, anything that's on the policy that's not excluded is included.
Okay.
Okay, it's not going to cover flood. It's not going to cover earthquake.
Oh,
Right.
Okay, so flood damage. Flood is a whole nother entity. The best way I describe flood is if you have a bad rainstorm and it runs across the land and enters into your home. That's flood.
I remember you told me that.
That's flood.
That may have been the first
I'm
lesson
going
I
to give
learned
you a
from
perfect
you.
example. So I have another loan officer that
Okay.
I also too work with, and he has those lovely basements that have the steps that go up, and at the bottom of the steps you have
Is
that
it the-
drain.
I
Yes.
have one.
Well, his drain got clogged, and they had a really bad rainstorm, and the water rose
up.
and went into his basement.
Right.
That's flood insurance.
Oh.
If you don't have flood insurance, you will not have coverage. It happened to him twice. Well, then you need to make sure, girl, you need to make sure that drain is unclogged.
I didn't know that. That's considered flood insurance.
That's considered flood because it has
Okay.
risen, it
Yeah,
has
and-
come
and it
across,
comes into-
and it comes into your home.
Because when it
Absolutely.
rains a whole lot, my husband runs down to the basement
for
to look to
him,
make
yes.
sure, because we have the pumps. He has the backup
sump
pump, the
pumps.
sump pumps. He has a couple of them, but he makes sure that water has not risen and come. Okay, I have to let him know.
You better keep him on it.
Yes,
Keep him on it.
yes, absolutely.
So is that
Okay.
the same type of flood insurance that if we live closer to water,
Yep.
the water
It's the
could
same.
rise? It's the same.
The flood insurance is not cheap.
It's the same
It's
thing.
expensive. Don't
But-
even say not cheap. You
Okay.
can't even put the word cheap in there. It's expensive.
Well, it depends on what flood zone you're in.
Oh, okay, okay.
The flood zone.
Exactly.
There we go. The
You
flood
got
zone.
flood zones, girl. You got flood zones.
Okay.
Because we're not in a flood zone, Jackie.
That's
No.
right. We're
Well,
not.
every home is in a flood zone. It just depends on what zone you're in. You're in zone X, which
Okay.
means that you're not required to have flood insurance.
Not required. Okay.
Right. X flood zone insurance right now is about $7.99
Oh,
for the
okay.
year. It's not bad.
But that's added to.
I'm gonna add
That's
that.
on top of your homeowner's
on top
insurance.
I'm gonna add it.
Right.
$7.99.
But no,
No,
$799.
I said expensive, Barbara.
I said $7.99.
Oh.
Terry, add it on, girl. Add that flood insurance on.
So flood insurance policies are completely different from a homeowner's policy. Completely different. It's not something you can add on. It's not an endorsement. So it's something that you will have to call a flood expert and get that flood insurance policy, like myself. So you can call me.
She's also a flood insurance expert. Yes, of course
Well,
she
we're gonna
is.
be looking at that flood insurance, right? Oh, boy.
Now,
Wow.
would you actually tell your client, someone like Barbara, her house
has
is not located, she's in an X flood zone, you just said that,
Mm-hmm.
to add it just because of the drain at the bottom of her stairwell?
I would
that be-
never. I wouldn't think to say, "Hey, I think you need flood insurance," unless it's a very wetland area. A lot of a lot of clients, they don't want extra expense.
Right.
I have a client that lives closer to the water, even though they're in an X flood zone, but they live closer to the water, I always tell them to look into it even after the fact of closing. The reason why is because if you get flood insurance and it's already in place, and say they rezone the area and you were in an X and now you're in an AE, which is now required by anyone to have the insurance, you can get grandfathered in at the low rate that you're paying at $7.99 instead of the FEMA rate, which could be $2,500.
And that's what happened with that client that I.
So
that
you
I met
can
with.
there's so much information about flood insurance. That's a whole nother hour, girl.
Okay. we may need to know about that because I want to know about the creeks and the ponds in the back.
Yes.
We'll talk about that later. But
Yes,
that is
absolutely.
something that needs to be heard. Yes, absolutely.
Yes, for
to
sure.
make sure that everybody, because our whole series is on making sure that everybody is properly covered.
That's right. That's right. So are we saying we may have to have Terry back?
We
for
may have to,
that-
because we
for
need
that
to know
again?
about this flood
Or-
insurance
Flood
stuff.
insurance.
'Cause-
What do you
Do a
think,
flood
Terry?
insurance. I mean,
Yeah.
maybe not an hour, but
Okay.
you
Yeah,
know,
okay, we can do
definitely,
that. Most
we
definitely.
could definitely do a little class on it
Excellent.
and figure something
Would
out.
love
But
that.
flood insurance is a big thing, and now we have private flood insurance that you can also get quotes with instead of FEMA. FEMA is a government related
Right.
that a lot of lenders require a FEMA regulated policy versus a private flood. But the private flood policies have a lot more to offer. Like they'll cover pools. They have extended dwelling. The only downfall to flood policies that I can say is that their deductibles are separate. So if you say you have a $5,000 deductible, it's times 2. Because your flood policy has your dwelling deductible and you have contents deductible. So they're separate.
Okay.
So
Okay.
Okay. So would the FEMA policy, flood policy, be more than the private flood policy? Or
actually, they're normally less.
FEMA's
FEMA.
less?
No.
Oh,
the
private
private
flood
flood.
is
Oh,
usually
private.
less than FEMA.
Okay.
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 But most people don't know to go to FEMA. They would go to an insurance agency, right? But
Well,
then you
we-
look into it to see if it's a government policy or whether or not a private.
Well, I can choose to put them with whichever
Okay.
I choose. And a lot of people think just because their loan is paid off, oh, I don't need flood insurance. I don't need homeowners insurance. You still should have it, even if the loan is
that's
paid
your
off.
investment. That's your home. Why wouldn't
Right, but there's a
someone want
lot of
that?
people
Well,
that
some states don't require, but I think Maryland requires. Don't we have to have insurance? We have to have insurance.
not
right?
if it's paid off.
Not if it's paid off. Okay.
If there's if you don't have a loan on the property, you
Well,
don't have
So it's
to
always
technically.
related to a loan. That's what I was
my
wondering. It's
This is
always-
related to a loan. Okay.
This is some interesting information, Terry.
is.
We are going to have you back on because I don't think we covered. I don't think we covered. And Jackie, our hour is like almost up again. We do this all the time. We have guests. We get to talking and asking questions because we're trying to figure it out too, Terry.
right.
And we always want to have someone back on because we don't get to cover everything. So this has been a really, 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 really good show today.
Yes. So I just have one question if I'm able to ask that. Sewer backup. Is that covered always or is that an extra policy, an extra extension?
It is an endorsement that is on the
Endorsement, that was the
policy.
word I was trying to think
In
of,
the state of
endorsement.
Maryland, you have to at least offer $5,000 of coverage.
Okay.
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 I never do $5,000 worth of coverage because if that sump pump stops working for any reason,
Right.
Okay.
then you need to make sure you have that coverage.
Great.
At least do
Thank you.
25,000.
Okay.
Right.
Thank you.
So this has been another great
It
show
has been.
again.
Thank you so
Yes,
much,
it was
Terry,
fun.
for joining
And
us.
we are so happy that you did come here for us today. So we need to remember we are here to help you. Jackie, go hit your favorite line. Understand? Go ahead, Jackie. Hurry up, Jackie.
Okay, so
remember, we are here to help you.
We are here to help you. That's why we're here, because we're here to help you.
We're here to help you. Yes.
Because we want you to be ready when it's time for you to purchase a home, and we want you to be ready for that.
Yes, we want you to be ready. In order to understand,
Your power
to
purchase.
purchase. Thank you for joining us again, and we will see you in 2.